Australia's Westpac Bank has been speaking at a series of events recently, exploring the current state of the commodities markets. Despite China's growth slowing in recent years, it says the force behind the current supercycle is the urbanisation of Asia, not just China.
Commodity supercycles is a really interesting topic. Right now, we are still in the urbanisation of Asia. Obviously, we've been led off by China, and of course that's led to a huge increase in demand for commodities. As China's market slowed and we've had oversupply of those commodities come online, of course prices fallen away. But that's a temporary cycle within the big super cycle. We still have the industrialization and urbanization of markets such as Indonesia, even India, Vietnam, Myanmar. All these countries have still to go through that cycle yet. The commodity super cycle is still alive.
Another major theme that experts are debating is when will supply fall back in line with demand?
We're reaching a point where we're seeing a floor in a number of commodities. I won't yet call a floor in, say, iron ore. I think there's still a way for that to go in terms of downside risk. I think we've got new mines coming on. Roy Hill is the case in Australia that will be coming on with up to 50 million tonnes over the next 12 months or so. You've got mines in Latin America that will be coming up with more product as well. So when you put that oversupply into context in iron ore, there's still more supply coming in. We haven't yet reached the point where there's an equilibrium.
Is the supercycle limited to just hard commodities, or is it broader?
We are a producer of commodities, right? You can dig a spade anywhere almost in Australia and you'll come across some form of commodity. Equally, we have a great agricultural resource, both in Australia and indeed New Zealand. There's a huge amount of dairy product that now comes out of Australia and New Zealand, and of course, related to the dairy, there's the meat trade as well. Now, when you look at the super cycle and the urbanisation of Asia, what you're getting on the back of that is an increased middle class. When you get increased middle class, you generally get a higher protein-rich diet. So there is much more requirement for higher protein. That in turn leads to the demand for those dairy products, those meat products, etc.
Banks play a vital role, not just in financing the production of commodities and in the price risk management of the commodity, but also in managing risks around the entire supply chain.
So for Westpac, commodities is really in our DNA. We're an Australian bank and Australia is full of commodities. So what is our role? Our role is to help facilitate the production of the commodity, the refining of the commodity, and the sale to the end user of that commodity. We can do that in a number of ways. We can help our clients by price risk management of that commodity, particularly in the volatile pricing era that we're now in. We can also assist our clients in FX hedging. So if you think about the commodity supply chain, you start off in Australia with a cost base in Australian dollars. You then convert to US dollars in terms of pricing of that commodity, and then you may be paid in RMB at the end of the day. So mitigating that FX risk is a very important part that banks, including Westpac, can play for our clients today.